All right. Assalamualaikum warahmatullahi wabarakatuh. Good afternoon, everyone. All right. Now I'm actually online from the campus. So for everyone that probably missed the campus environment, so you can just look at my background. There is a whiteboard on the back. Okay. Today meeting we're going to discuss the first topic in a confidential accounting tool. It's a consolidation ownership issues. So I'm using now is actually I'm using the Question Simple, the latest edition, it's 12th edition. So this topic will be talk about the consolidation ownership issue. Will be cover the certain information about the consolidation concept and procedure, and also because this is closely related to the intercompany transfer also, and then another topic that we've been discussed in financial accounting one is actually kind of related. So I'm just going to explain a brief about this topic. So in this book, there is an illustration about the Berkshire Hathaway's direct investment. So this is an investment company. So in before, there is also a story about the Berkshire Hathaway under the direction of Warren Buffett. So you know that Warren Buffett is kind of the investment, it's kind of very successful in that part. We don't repeat that history here, they said like that, but we know that the author Berkshire Hathaway, they only own common stock in many well-known companies. So it also has various other investment, right? That probably you don't know. For example, in 2015, the Berkshire Hathaway acquired around $12.25 billion of the Heinz common and preferred stock. And also another situation when the Berkshire also owned preferred stock in Wrigley, Dow Chemical, and Bank of America Corporation, totaling more than $10 billion. So actually in the previous chapter, I mean like the one that we cover in financial accounting one, we focus in several simple ownership situation, which there is a controlling entity and has a common stock in there and also another controlling entity. So relatively actually in this book, there is kind of a complex ownership structure. So in this example, Berkshire have both common and preferred share. And also there is one or more subsidiary that can be acquire stock of parent and other related company. So sometimes the parent ownership will be claimed on the subsidiary that probably change through the purchase, and also if they have an activity like a self-subsidiary share, or probably with other activities like stock transaction of subsidiary. Sorry, the campus situation like yes, it's gotta be great. It's not really quiet in here. Sorry. Right, so discussion of this chapter would be discussed about the understanding consolidation problem that arise from the complex ownership situation. So there is a situation when we need to discuss the subsidiary preferred stock of outstanding, and also if there is a situation when there is a change in parent ownership interest in the subsidiary, and also there is a multiple ownership level, the reciprocal or mutual ownership, and also subsidiary stock dividends. So what actually we're going to cover in here in the chapter 9, the learning objective, is when you finish study, we hope that you can understand and explain how the consolidation process will be differ when the subsidiary has a preferred stock outstanding. All right, so in this chapter, we're going to start if there is a company had the preferred stock outstanding, not only the common share. And second one, we want you to know and understand about how to make the calculation, prepare consolidation entries for the partially owned subsidiary. So if the subsidiary partially have the subsidiary and they have the preferred stock outstanding, so what could be the way and solution for this part, and how the calculation on that part. The third one, learning objective, is make the calculation and explain how the consolidation procedure differ when the parent's ownership interest change during the accounting period. So this is a situation happen when there is an ownership changes, right, during the accounting period. So what could be the explanation or calculation will be covered at this part. And the fourth one is make calculation and prepare consolidation entries for a partially owned subsidiary when the subsidiary has a complex ownership structure. Okay, so we're going to also focus on the complex ownership structure and how can the calculation and consolidation entries that we prepare or prepared by the company. And the fifth one, understand and explain how the consolidation procedure differ when the subsidiary pays stock dividend. All right. This chapter 9 will be covered for the, I think it's 2 meetings. Yeah. So we're going to complete it in 2 meetings. And at this meeting, at the first meeting, we're going to separate it, this 9 topic that cover in the group. So started from the subsidiary preferred stock outstanding. So just go back to learning objective number 1, will be talk about how the consolidation process differ when a subsidiary has a preferred stock outstanding. So actually many companies have, you know, they have more than one type of stock outstanding, right? So yeah, the function is also different because it have kind of the feature of the function itself and the securities itself. And the preferred stockholders normally have the preference over a common shareholder, right? So it's why we call it preferred stockholders, because it will be kind of closely related to the respect to dividend and also how the company can distribute the asset while there is a liquidation, right? So, and another advantages is about relates to is actually, I mean, it's not a practice, but I mean, another characteristic is the right to vote is usually withheld from the preferred shareholder. So the preferred stock ownership actually, they have no control, like doesn't convey control, right? So yeah, probably that was kind of disadvantages for the preferred stock shareholder. So because the subsidiaries, preferred shareholders do have a claim on the net asset of subsidiaries, so there is a special attention that has been given, right, by the company. And also there is a specific attention that claim in the preparation of consolidated financial statement, right? So at this point, I think been create a video relates to this example. So you're gonna go jump into the example about the consolidation with subsidiary preferred stock outstanding. So while preparing the consolidated financial statement, so there are, you know, subsidiary stockholder security that accrue the preferred shareholder, right? So they have, sorry, it's really noisy here. So they have also determined, I mean, like kind of the elimination that needed by the company, right? Elimination needed to relate to the intercompany common stock ownership. And if the parent holds some of the subsidiary preferred stock, so the portion of interest must be eliminated. Okay, so it will be any portion of subsidiary preferred stock not held by the parent will be assigned to the non-controlling interest. Okay. So the rest of this chapter, for example, related to the example of this one, so I've been creating a video, so you can just continue it by looking at that. And I also given the sample exercises that you can be used as a guidance to do the homework and also the exercises. Right. So thank you very much, guys. So please continue the next one. Right. Continue it. Also do the assignment. Okay, thank you. Assalamualaikum warahmatullahi wabarakatuh.